American Airlines Group raises Q1 revenue outlook as demand surges, fuel costs spike at conference. Key points. American raised its Q1 revenue outlook, now expecting more than 10% year-over-year revenue growth, roughly $1.3 billion after record booking momentum, and more than 10% unit revenue growth in March, with strength expected into April and May. Recent fuel volatility has created an estimated $400 million hit to Q1 expenses, and may pressure results into Q2, but the airline says it will finish within guidance, toward the lower end, and has more than $10 billion of liquidity, plus more than $25 billion of first lien, unencumbered asset capacity, to buffer shocks. For the rest of the decade, American plans network and fleet growth, about 200 additional aircraft, and about 50% more lie-flat seats, while targeting $1.5 billion of incremental pre-tax income and credit rating improvement through premium and efficiency initiatives. Executives from American Airlines Group, Nasdaq AAL, told investors at a conference that demand remains strong, and that first-quarter revenue trends have improved faster than the company initially expected, prompting an increase to its first-quarter revenue guidance, even as fuel costs have risen sharply in recent weeks. CEO Robert Isom said American's revenue performance is improving at a rate greater than we had originally anticipated, and the company is now expecting more than 10% year-over-year revenue growth in the first quarter. He described that as a record year-over-year increase for American, equating to roughly $1.3 billion of additional revenue compared with the prior year. Isom pointed to booking momentum during the quarter, saying 8 of the company's top 10 revenue booking days and 8 of its top 10 revenue weeks in company history occurred in the first quarter. He also said American expects more than 10% unit revenue growth in March and anticipates strength continuing into April and May. In response to a question about weather impacts, Isom said the updated revenue outlook includes disruptions from winter storms. He noted that a prior storm, Fern, had been estimated to have about a $200 million impact, and said another storm, Gianna, that shut down American's Charlotte hub for a couple of days, is baked into the guide. Isom highlighted recent fuel price volatility, saying fuel prices increased rapidly over the last few weeks and have created an estimated $400 million impact to first-quarter expense since American last reported earnings about 7 weeks earlier. He said the company expects an impact to first-quarter profitability, and likely an impact in the second quarter as well, depending on the duration of the fuel increase. Despite the cost pressure, Isom said American still expects to finish within its first-quarter guidance range, though towards the lower end. He added that excluding the fuel run-up, the company would have produced a profitable first quarter. Isom also said American is prepared for volatility, citing expected first-quarter ending liquidity of $10 billion, total debt at a 10-year low, and a tremendous amount of unencumbered assets that could be used as collateral if additional borrowing were needed. Chief Financial Officer Devin May echoed that message, saying the company has more than $10 billion of liquidity and unencumbered assets and first lien capacity of more than $25 billion. May said American could raise incremental liquidity if elevated fuel persists and demand changes, but characterized the fuel spike as a pretty short-term shock so far, and said the company would give it some time before we change anything. On customer experience, Isom cited improvements to check-in, lounge investments including a 10th flagship lounge announcement in Charlotte, and new Admirals Clubs planned for Austin, Miami, Charlotte, and Chicago. He also mentioned onboard changes such as champagne offerings, a coffee partnership with Lavazza, and elevated food options. He said American plans to establish satellite Wi-Fi across its mainline and regional network, sponsored by AT&T. Operational reliability was also emphasized, including adding schedule buffers and initiatives at major hubs. Isom said American is re-banking Dallas-Fort Worth and taking similar steps in Philadelphia to improve resilience and recovery during disruptions, alongside technology and mobile self-service enhancements for customers and tools for frontline teams. On network growth, Isom said 8 of American's top 10 hubs are in the 10 largest U.S. metropolitan regions, which he described as areas with strong economic and population growth. He highlighted major infrastructure plans at Dallas-Fort Worth, including a new Terminal F, expected around 2030, and enhancements to Terminals C and A, with new piers coming online this year. ISM said that once completed, DFW would be the largest single-carrier hub in the world over the next few years. ISM also cited growth plans in Phoenix, Miami, Philadelphia, and Chicago, with Chicago described as a market where American intends to re-establish its network to pre-pandemic levels. On fleet, ISM said American has no planned retirements in the near term and has a flexible order book. He said the airline expects 200 additional aircraft by the end of the decade, with options to grow beyond that, and highlighted planned deliveries including 787-9s and A321XLRs. He also said the company plans reconfigurations across much of the existing fleet, including Boeing 777-300s, 777-200s, Airbus A319s, and A320s to add premium content and improve the coach experience. ISM said American's lie-flat seats are expected to grow by 50% by the end of the decade. In a discussion of international network strategy, Chief Customer Officer Nat Piper said American intends to play in both major city and more niche international opportunities. He highlighted joint business partners, including Qantas and Japan Airlines, as well as opportunities through Madrid with Iberia. Piper also pointed to A321XLR-enabled routes, citing a Porto flight planned from Philadelphia next year, and a Prague route from Philadelphia this year, and noted service from JFK to Edinburgh. ISM said American's A-Advantage program remains central to its strategy, and he pointed to record loyalty enrollments. He also discussed the company's new, single co-branded credit card program with Citi, launched January 1st, saying American saw the highest co-brand acquisitions ever in the first 2 months of the year. ISM said the company remains on track to meet its goal of increasing pre-tax income by $1.5 billion by the end of the decade, compared with 2024. ISM and Piper also discussed premium trends. Piper said premium demand has supported investments in premium configurations, including 787-9 deployments to Heathrow, and cited modifications on domestic aircraft, adding more first-class and premium seating. At the same time, he said American is also seeing improving main cabin demand, with strong unit revenue performance in the back part of the airplane in March and April, and bookings into the second quarter. On costs and profitability, ISM said American has generated about $1 billion of savings since 2023 through a business reengineering effort, and has labor cost certainty with contracts in place for the next couple of years. He said the combination of commercial initiatives and efficiency should support margin expansion, free cash flow generation, and balance sheet improvement, with an aim of reaching a BB flat credit rating over time.